Hello and welcome to this week's episode for SPY Trader Now. I am your host. My name is Ken. Today is May 20th, 2023, and our model portfolio is up 6.05% year to date. Our goal here at SPY Trader Now is to beat the returns of the S&P 500 buy and hold investor. Their portfolio is up 9.33% year to date. So we are behind by about 3% from the buy and hold investor. And our goal is to beat that return before the end of calendar year 2023. So we've got some work to do ahead of us. We do a very simple portfolio. It's a 3-position portfolio. We either have SPY, which is the symbol SPY for the S&P 500 ETF, electronically traded fund, or we do options, or we're in cash. Currently, our portfolio is 100% invested in cash. Here are some past results for SPY Trader Now. Just last year in 2022, when the S&P 500 returned a negative 19% return, we returned a positive 21% return, which was a 40% differential. So last year was good. In 2021, 78%, and in 2020, we doubled the portfolio with a 100% return. If you want to see how I do this, hit that subscribe button, ring that bell, and smash that like button down. Here at SPY Trader Now, we buy, sell, and trade the S&P 500. This is a one-year chart of the S&P 500 daily bars for these candlesticks. And I just want to highlight the last trade I made on 5/15/23. Did a cash secured put with the 406 strike. That's this green line was my strike price. The expiration date was 5/19, which was Friday yesterday. And I got paid a premium of 90 cents for that trade, which returned a 20% annualized return on investment. Obviously, we didn't get exercised because the market closed here on Friday. And not only did it close high, but it closed out of the trading range, which is these magenta lines that I've been highlighting. And I wasn't sure which way it was going to break. We had tagged this lower magenta line a couple of times, and I wasn't sure if it was going to come down or go up. So I took the conservative trade, placed it at the lower trend line here in the trading channel, and instead of breaking down, the market broke up. Last week, the S&P 500 on a week, these are weekly bars, the weekly gained 1.71%. So I consider that a very good week for the S&P 500. Now, I was marking this as overhead resistance. We've crossed above it, but you can see on the weekly bars how it doesn't look quite as pronounced as the daily bars. And here again is that trade that I made. I sent that trade alert out on Monday, May 15th at 7:43 Pacific Standard Time. If you would like to receive my trade alerts when I send them out, go ahead and head over to spytradernow.com and you can sign up. There'll be a link down below for you to do so. Here are all the trades I made for calendar year 2023, and our portfolio value currently resides at, we start the year at 100,000, we're currently at 106,052.60. Here is the equity curve for the model portfolio. You can see how well we've done for calendar year 2023. This is the equity curve for the SPY buy and hold investor for 2023 year to date. And here are the two equity curves combined. Pink is the buy and hold investor, and blue is our model portfolio. We are trailing behind the buy and hold investor by 3%. And our goal is to beat that. So this is a tough year because I'm very, very skittish on the market due to an inverted yield curve. I'll go through that later on. The last interest rate hike by the Fed Chair Jerome Powell was done on May 3rd, 2023, 25 basis points that brought the federal funds rate to 5 to 5.25%. The next announcement by the Fed will be on June 14th. Will we have a 25% rate hike? The answer is he's data dependent. So if the data supports it, he will give us a 25% basis rate hike. Otherwise, he'll pause. Now we're looking at things from a bond market outlook. I want to look at things from different perspectives. Bond market outlook is telling us that we are in a very bearish stance. Why is that, Ken? Because we have an inverted yield curve. Well, what's that? That's when the 10-year yield is producing a lower yield than the shorter term treasuries, which is the 3-month or the 91-day and the 2-year. You can see that these yields are higher than this yield, the longer term yield. So that's an inverted yield curve. That is not normal. This will eventually correct back to normal. And we are waiting for that to do so because we really can't have a true bull market without it being in a normal condition. In addition to an inverted yield curve, we also have rising interest rates. 1 year ago, the 10-year was at 2.98. Today, we're at 3.57. That's a rising interest rate in market, which is making it more attractive for people to go into bonds than in equities. That's why, from a stock market investing standpoint, these are all negative or bearish stance perspectives. You can get all this information from this link, bankrate.com. There'll be a link down below for you to explore this on your own. And this is updated on 5/18, so it's very fresh data. Now we're looking at valuation according to current market valuation, CMV. Their link is here and it'll be down below if you'd like to click on it and explore it on your own. But they are telling us the market is overvalued. We're at a +1 standard deviation. 67% of all trading takes place between the -1 and +1. 95% of all trading takes place between the +2 and -2. So this is where we currently stand, and we know we are in an overvalued condition. So can the market go higher? Yes, but you have to recognize it's at greater risk. This is the Fear and Greed Index. Here's the link, and it will be down below as well. And of course, our favorite Wall Street investor, Warren Buffett, over here in the corner, telling us what his words are on fear and greed. Where do we stand? We're at 67. Where were we 1 week ago? We were at 58. Greed is increasing. And what happens when greed is increasing? You want to be fearful when others are greedy, okay? So as the greed increases, that's when the risk increases as well. Just recognize that. Now we're looking at it from a seasonality outlook. These are seasonality bars over here going back 20 years. S&P 500, we're in the month of May. There's a 74% probability that we will close higher than when we opened. Where do we stand now? For the month of May, we stand at a positive 0.65. So technically, we have already achieved this 74% probability, but the month isn't over yet. So we want to watch that and see what's going on. Now we're looking at a long-term outlook for the S&P 500. This is going back 20 years. These are monthly bars, or it's a monthly chart, I should say. And you can see the nice bull run we had since 2009. Fantastic money was made during this time. Then you come down in this trading channel, we broke out, and last week, this looked a lot different than what it looks like now. Now it looks like it's going straight up to the stratosphere. But last week, this was topped and pointed down, looked like it was going to come back down and kiss the support line. It obviously did not do that. It went in the other direction, but that's what it looked like just last week. So the MACD has not crossed above its signal line, but the slow stochastics is moving steadily up. We are in a bullish configuration as long as we stay above this support line right here. From a long-term outlook, we are in a bullish condition as long as we stay above this line. Now, this is a weekly chart going back 5 years. This is an intermediate term outlook. Here you can see where we are, but we have just broken out above this short-term, well, fairly short-term, intermediate term resistance line. The next one is going to be this line, this high, this where we did the top and came down, right there. So it's about 422, something like that. Right around 420, 422, 423 is our next resistance line from this peak right here. Short-term outlook. This is a 1-year chart, daily bars candlesticks for the S&P 500 trading channel, broke out above it, and now we are sitting right here. Are we going to stay above it? So here's the unknown question. You don't know the answer to this question. Let me show you the next chart down. This is a 6-month chart rather than going back 1 year. You can see the trading channel that we broke out, and you can just see the bars a little bit clearly in this 6-month chart rather than the 1-year chart. Now, the answer is this. Are we going to stay above this now support line? When we were below it, it was a resistance line. Now that we've broken out above it, it becomes a support line. Are we going to stay above it is the next question. The answer is nobody knows. But we do know that the more time that you spend above this support line, that is the greater probability that this support line will not be broken. And now we can move up our stops, in other words. Now we're looking at the VIX, the volatility index, or the fear index. We are been stuck in this range, this low range for a little while. We're still stuck in it, and we are right here. The number is 16.81. Right there, you can see it, 16.81 at the top of this candlestick body right there. You can see it a little bit better in the thumbnail. Well, we're at the low end of this chart, but we're still in this range. So the way to make money that I'm looking at it is to continue our cash secured put strategy, considering that fear is not really getting out of control. The greed is starting to increase. So we don't want to take on a ton of risk. So we want to acknowledge and watch everything. Now we're looking at a chart of the 1-year chart, S&P 500 daily candlesticks, but this is the TD Ameritrade's Thinkorswim platform, which is my broker. And you can see the standard deviations of -2, -1. There's the halfway, +1, +2. We currently reside at the +1 standard deviation on this 1-year chart. Well, how much time have you spent above the +1 to the +2? Very little time. You have to go all the way back to about August of 2022 to where you spent some time and actually bumped and hit that above that +2, and then it came down. But the point is that, are we going to start to explore some of this territory? Again, we don't know that answer, but the risks are elevated at this level. Now we are looking at the same chart, 1 day or daily bars, daily candlesticks, but instead of going back 1 year, we're only going back 3 months. So you can see the bars in the chart a little bit more clearly. We are just above the halfway point, but not even at the +1 on this 3-month chart. So the market in this chart really can go in any direction. Okay, I just gave you a ton of information in this presentation. Now comes the critical thinking. What are you going to do with that information? Well, my take as of May 20th, 2023, market summation according to me, SPY Trader Now, the market is showing it just broke above a trading range, but will it stay there? I want to participate by selling a cash secured put. On Monday, 5/22, I'm going to sell to open 2 cash secured puts with the 5/26/23 expiration, 4/10 strike, 64 cents is the premium, and I will get paid approximately 14% annualized return on investment for that trade. I know this information because I put it into my cash secured put calculator. If you would like to have this calculator for free, just head over to spytradernow.com and you can download it. And that is where we got our information, 14% annualized return on investment. Now, the good thing about this trade is that with this trade, you can get a downside protection of 2.21%. Now, if you want to be more aggressive, you could do a 412 strike price. And with the 412 strike, you can get that 20%, which I really like to get a 20% annualized return when I do these trades. but you're only going to get a 1.8% downside protection by achieving that. And considering where we're at, I'd rather take the less premium and just take a more conservative trade. And because we just broke above it, we've only been above this for 2 days. I'd rather be more conservative than aggressive at this juncture in the market. So that's where I stand. I hope you got some valuable information out of this video. If you have not done so already, please go ahead and hit that subscribe button, ring that bell, smash that like button down, and I wish you good trading.